from the morning reading. With 1/3 of the S&P companies reporting first quarter earnings so far, 71% have exceeded lowered expectations. However, profits were weakened by a strong U.S. dollar, which gained 23% during the year ended March the 31st. Only 44% of companies have topped revenue forecasts. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:53 a.m. Central Time, and I'm recording this in preparation for market day, April the 27th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in our overnight action. Well, not a lot. Pretty quiet Sunday night. Broad market indices are scratched to slightly up. Russell's at scratch. The other three are all up about 0.25% as of the time of this cut. Crude oil was down about 0.25%. The euro was down about 0.25 as well. Bonds scratch. Gold up about 0.62%, so it's the winner of the biggest move award for the overnight action. China, wow, well, here's where our action went. China up 3%, and Hong Kong up over 1%. Japan, just a little bit of weakness. Germany also up nicely, about 0.5%. United Kingdom is scratch. In terms of macroeconomic reports for today, there really isn't anything to speak of on the U.S. calendar. For tomorrow, we have consumer confidence, and that's really about it. That will be during the trading day, though, so be aware of that. The big one, of course, comes later this week. You got FOMC statement this week, Fed funds rate. So markets are likely to be a little choppy, perhaps sideways, especially after the first hour or so of the trading day. As we head into the FOMC statement on Wednesday, so you're going to need to be very, very careful in trading on Wednesday prior to that activity. In terms of, let's see, our current volatility, look at the short-term VIX, 10.86. Skew is only 123, so nothing really warning there. Historical IVs, 14, 6, 18, 28, Dow being the 28. So nothing really of note there. In terms of standard deviation moves, it really has been quite a bit more quiet these last couple weeks, with that one burst of activity that came when China changed its margin rates on its index, and then the bounce from that action. Other than that, we really have had very little. This one right here on the NASDAQ, that was created by Amazon and so forth having big earnings and creating the entire index. So we've got to always kind of keep in mind that NASDAQ is, there's like 5 or 6 companies that are a very, very large dominant piece of that entire index. The same thing is very true with the Dow, with only 30 companies in the Dow, such as Apple. Apple's got earnings coming up, and if it moves big, the whole Dow will look like it's moving big. So on these smaller diversification indexes, a handful of companies can have a big impact. So this really wasn't about broad strength in NASDAQ. It was really about earnings plays on a couple companies. So really, if you look at the last 2 weeks, you have the Chinese margins rules changes, the bounce from that, and you have earnings at a couple NASDAQ companies. And other than that, there's really been very little significant activity in the market in the last 2 weeks. You have on your daily report, let's take a look. Gold futures, good grief, gold futures should be Let's see here. Looks like June contract on the gold futures. I was thinking it should roll over, but it is not. Nope. So keep an eye on gold. Gold should be rolling over soon. A number of changes came into play over the weekend. This is starting to look quite a bit healthier. IBD status uptrend resumes. GMI index 6 out of 6, so all beautiful there. Active trader market posture is bullish. Position sizing opinions are all at 100%. From both the investor position sizing opinion as well as the active trader based on volatility. Market timing opinion at this point is neutral for both 1 day, 3 day, as well as 2 week. Market posture in all 4 indexes is bullish. S&P is almost at the point where it's categorized as very bullish. Dow has also been improving. NASDAQ and Russell are already very bullish at up over 80. So everything looks very good there. Hedge warning status 0+. So that's normal with some cautionary aspects, and the number of cautionary aspects frankly has dropped. I did consider dropping this to a 0, and the only reason I didn't drop this to a full out 0 hedge warning status is this right here. The distribution day count is still seriously high, with NASDAQ at 6, the S&P at 5. This normally, when you have this many distribution days, this is normally a cause for that the market is going to roll over, and I just can't quite bring myself to bring this hedge warning status all the way down to a 0 with this giant sore thumb here flashing. But other than that, I mean, everything else is in pretty good shape. We don't have any other volatility warnings other than the VIX being in a daily squeeze, and you have to recognize, of course, the VIX can stay in that daily squeeze for a prolonged amount of time, weeks. So that is not a intermediate warning. It's just mostly a warning that volatility will return, and at some point volatility will increase. That means we need to be cognizant when we, especially if you're an option trader, that you're taking into account this potential for an increase in volatility on your strategy selection. But in terms of market timing and market risk, that right there wouldn't have me elevate hedge warning status by itself. This distribution day count is far more serious. And, you know, our intermarket risk aversion indicators, all risk on now. New highs, new lows. Looked very good on Friday at 341 new highs against only 99 new lows. Option income strategy opinion, VIX is inside the acceptable window but in a daily squeeze. But just keep in mind that you are at the lower edge of that acceptable window, and you have to take into account that potential for increased volatility. Cover call strategies, a new opinion here, bullish, calling for a 1-to-1 distribution between in the money and out of the money strikes. So not as conservative as we were prior to the establishment of these new highs and so many of these warning areas kind of falling off. Put selling, from a market tone, kind of tough to sell puts except for individual charts that present themselves, such as an earnings miss or something like that, maybe presenting an opportunity. But in general, acceptable to sell puts against a core portfolio basket of stocks that you're willing to own, in the position size that you're willing to own. So as you see, in general, everything is looking pretty good, and not a lot of an intermediate warning. But that being said, we've just not had that kind of breakout with significant volume and broad participation that we really would like to see in establishing new highs. It's been more climbing the wall of worry and never short a dull market kind of approach, as opposed to some sort of conviction being expressed by institutions with their volume purchasing at these levels. That has not been there. So we will play the charts as they present themselves, and yet at the same time we'll be very quick to hedge against down moves should we see things start to weaken and break down. From the relative rotation graph, you see more evidence of this, while XBI, XSD, ITB, FDN are our strongest players. These are not exactly showing really strong tails. You want to see this kind of going from the lower left towards the upper right, and there's not a lot of tails that are doing that right now. They're really all weakening, so that is not a great sign. In terms of this weekend's point and figure charts, new settings on oil and the dollar oil ratio, so kind of keep that in mind if you're playing in those markets. Sector market postures, obviously, as you would expect, very, very healthy at this point, with only industrials and consumer staples showing significant amount of weakness at this point. Sector percent change, consumer discretionary was the hero on Friday, and information technology and utilities both up about 1%, materials close by. After that, it really kind of falls off. Energy continues to be that sector that is either at the top of the chart or the bottom of the chart from one day to another. Tough trading there, or very opportunistic trading, depending on just how nimble a trader you are. Retail, internet, healthcare, railroads, biotech are our leading industry groups at this time. So that is been very, very consistent. So they certainly should continue to be the focus of your watch list development activity. That should take care of us for today. Greatly appreciate you, as always, further investing in us by liking us on YouTube and sharing us what you have found with us on this morning video with your trader friends. More information is available, as always, at the website at falconglobaltraders.com. Disclaimers: hit the pause button if you need more time to review this, and we'll look forward to seeing you back here tomorrow morning before the market open in the market preview. Thank you.